Hey everyone, today I want to take you back to a company that most of Sri Lankan people interact with almost every single day without really thinking about it. Sri Lanka Telecom, branded today as SLT Mobitel. This is a company with 163 years of history, majority owned by government of Sri Lanka, but also listed on Colombo Stock Exchange. And in 2024, it did something genuinely hard for a state-linked enterprise to pull off. It swung from a group loss of 3.9 billion rupees in 2023 to a group profit of 3.1 billion rupees in 2024. That's roughly 7 billion rupees turnaround in 12 months. So today, using SLT's 2024 annual report, I want you to break down how they did it. So first, who exactly are we talking about? SLT is Sri Lanka's national ICT provider. Fixed and mobile telephone, fiber lines, POTV, cloud connections, data centers, cybersecurity, and also IoT solutions. It serves around 9 million customers and also employs roughly 6,000 people and runs as a group the parent company SLT plus Mobitel. Their vision statement is all Sri Lankans seamlessly connected with world-class information, communication and entertainment services. And the mission backs it up, being a trusted partner delivering with quality and commitment. What I find interesting in 2024 annual report is its theme, where life sings. It's not just a tagline. It signals the strategic direction. SLT isn't trying to be a phone company anymore. It's positioning itself as a invisible infrastructure behind an entire digital lifestyle, connectivity, entertainment, cloud solutions, and enterprise services all around one brand. Let's zoom out into external environment. Because you can't judge SLT's strategy without understanding the concept it's operating in. I'll run this quickly through pestle analysis. Politically, SLT operates under Sri Lanka's Telecommunication Act and TRCSL regulation. And because government hold the majority stake, its strategy is never purely commercial. It also carries a national infrastructure mandate. Economically, Sri Lanka was coming out of IMF-supported stabilization program through 2024, so currency risk mattered a lot. A big chunk of SLT's capital expenditure, like submarine cable investment, is dollar denominated, while most of its revenue is in rupees. Socially, there is rising demand for digital lifestyle and SME digitalization. SLT's SME segment revenue actually grew almost 21% group-wide in 2024. Technologically, you have got fiber and FTTH expansion, 5G trials, and AI native network demands reshaping what customers expect. Environmentally, SLT has sustainability commitments built into its ESG reporting. And legally, compliance with Telecommunication Acts and the Right of Information Act shapes how it engages stakeholders. Let's move on to Porter's 5 forces. Competitive rivalry is intense. Dialog Asiata is the dominant private sector rivalry, especially after merging with Airtel, and mobile pricing is aggressive. The threat of new entrants is low. Telecom is capital intensive and license controlled. Buyer power is high in the consumer mobile segment, where customers switch easily but much lower in enterprise and government accounts, which is actually where SLT is strongest. Supplier power is moderate. Global equipment vendor and cable partners have real leverage, and the threat of substitute is real and growing. Apps like WhatsApp have directly affected traditional voice revenue for years. So, SLT is fighting a two-front battles, intense rivalry in mobile and substitutional risk in legacy voice. Let's flip inside of the business. Resources and capabilities using VRIO lens. SLT's National Fiber Backbone and Submarine Cable membership pass all 4 tests. It's valuable, genuinely rare in the Sri Lankan market, extremely costly to imitate given the capital and licensing required, and the company is organized around exploiting it through its enterprise and international transit businesses. That's a real sustainable competitive advantage. The 163-year brand and its trust with government and enterprise clients is another strongest asset. Hard for a purely private competitor to replicate overnight. But there are internal weaknesses too. The same government ownership that gives SLT privileged access to public sector contracts also bring administrative layers that can slow decision making compared to a private competitor. So, given that environment, what competitive strategy is SLT actually running? In Porter's term, this looks like a broad differentiation strategy layered with a focused differentiation play in specific segments. The broad differentiation shown up in the where life syncs ecosystem positioning, building fixed broadband, mobile, entertainment and cloud into one experience, which is genuinely different for a mobile-only competitor like Dialog to fully replicate, since Dialog doesn't own that same fixed line and cable infrastructure depth. Then there is a focused differentiation play aimed squarely at enterprise, government and SME customers, and this is where the numbers back the strategy up. In 2024, enterprise revenue grew 11.8%, government sector grew 11% and SME grew close to 24%, all comfortably outpacing the consumer mobile segment, which is stuck in a price war. So, rather than fighting Dialog head-on for prepaid mobile subscribes on price, SLT is competing on trust, security and full-stack digital solutions in segments where relationships and reliability matters more than price. Now, let's talk about actual strategic moves, using Ansoff matrix to map them by product and market. Market penetration. Continued FTTH fiber rollout to grow broadband share in the existing customer base. Market development. Pushing harder into enterprise, government and SME accounts, new customer segments for existing capabilities. Product development. This is where it gets interesting. Akasa multi-cloud, data service centers, cybersecurity offerings, IoT platforms, and the Mcash digital payment services all built on existing network to serve existing customers with new digital products. And then diversification, new products for new market. E-channeling, the healthcare appointment booking platform, is a good example of unrelated diversification. Stepping outside the core telecom competency, they come up with this e-channeling platform. But most of SLT's diversification is actually related diversification. It leverages the existing network, brand, and customer relationships. Nebula Institute of Technology, their educational and training arm, builds on their own digital capability. POTV extend into content and entertainment, riding the same broadband pipes. Okay, now let's get into numbers, because this is where the strategy either proves itself or fall apart. For the group, 2024 revenue grew 4.4% to 111 billion rupees. Gross profit jumped 19.6% to rupees 46.1 billion. Operating expenses were cut 4% to 71.2 billion rupees. That combination pushed operating profit up to a massive 172.8% to 11.2 billion rupees. Financial costs, which had been crushing profitability, were cut 20.5% to rupees 9 billion. Net result is profit after tax of rupees 3.1 billion versus rupees 3.9 billion loss the year before. Numbers like that don't happen without the organization behind them changing too. Structurally, SLT operates a parent company and subsidiary company group model. SLT PLC at the center with Mobitel, e-channeling, Gold Submarine Cable Depot, SLTS as separate but connected units. That structure lets specialized businesses like Submarine Cable Depot operate with their own focus while still reporting into unified group strategy. It's a sensible structural response to a highly diversified, related diversification corporate strategy. On people, roughly 6,000 employees across the group, and specifically on capability building, the Nebula Institute of Technology, which evolves out of SLT's old internal training center, is now positioned as a proper digital skills academy, training both staff and external students. Now, culture and leadership. I don't think any company can get 7 billion turnaround in 1 year without both culture and proper leadership. SLT defines its culture around 7 values: customer caring, trustworthy, innovative, responsive, teamwork, excellence, and results driven. What is notable is that last one, results driven, sitting openly alongside customer centric values. On leadership, Dr. Mohitilal De Silva as Group Chairman and Mr. Janaka Abesinghe as CEO were the ones who signed off and drove this 2024 turnaround. And if you look at what actually happened, a 4% cut in OPEX, a 20% cut in finance costs, while still growing revenue in the higher margin enterprise and SME segments, that is not luck. That reflects a leadership team making deliberate operational discipline calls rather than just chasing top line growth. That is a fairly transformational leadership posture for an organization with deep public sector roots, where the default culture can lean more bureaucratic. The real leadership challenge going forward is sustaining that commercial discipline without losing the trust and public service credibility that comes from being the national operator. Let's pull this together with something like a balanced scorecard view. Financially, a clear evidenced turnaround and one that continued into 2025, not a 1 year blip. On the customer side, the strategy is genuinely shifting from selling connectivity to selling a bundled digital lifestyle ecosystem, and growth number in enterprise, government, and SME confirm the differentiation strategy is working where it's aimed. On internal processes, real operating discipline with OPEX and finance cost reductions doing as much work as revenue growth. And on learning and growth, investment in the Nebula Institute and the digital workplace rollout shows some intent to build long-term capability, not just cut costs. The risks going forward: currency exposure on dollar-denominated infrastructure spend like the CMEV cable, continued mobile price competition from Dialog, the pace of the 5G rollout, and the structural tension of being a commercially accountable PLC that is still majority state owned. But overall, what SLT has executed here is a related diversification, differentiation led corporate strategy. So, that is Sri Lanka Telecom, a 163-year-old company still majority state-owned, but yet in 2024 ran into the one of the greatest turnaround in Sri Lanka. Vision translated into the digital ecosystem, competitive strategy translated into targeted differentiation, and execution translated into the numbers. Thank you for listening. I am Pasindu Galagedara.